Tackle today, Matt and Mark Justice from Tackle Trading, bringing you all of the charts, the news, the analysis, so that you can know what is going on in the markets in a concise manner. Markets continue to battle. It's just a genuine battle right now between the bulls and the bears this week as we get going. Certain moving averages acting as support, others acting as resistance. And these are the type of technical battles that occur every once in a while where there is, a little bit of indecision, isn't there, Matt?
Yeah, we're fighting for a little bit of confirmation in off a bullish retracement in RSP. And the simple reality is confirmation can be tough the same way breaking out of resistance can be tough. These are intraday resistance levels. And at the end of the day, resistance is hard to break. And so you're just kind of hovering right there against the 9 EMA on RSP. Yesterday's candle sniffed the high of the previous day's candle the same way this did here today. So you're definitely seeing a bid in the market much more than we did last week. And you're definitely seeing a little bit of support getting built, but you have to see confirmation. Nothing works technically unless you do see that confirmation. But we are seeing that bid come into the market that we did not have last week. And that is a good reprieve for the bulls. Now, do they have an opportunity at this low point? That's going to be about confirmation here on RSP. When you're looking at the spiders themselves, very similar type of price action over the last 2 days, fighting overhead resistance right there at that 550 level that it just broke out of last week. When it broke that level last week, we saw a massive volatility to the downside, good 10-point swing to the downside. That was one of the biggest days we've seen in the market. And so when you broke that level, look what occurred. And so again, resistance just is going to be a little bit tough to break. And you probably are waiting on the most important data points. At least the market is waiting on the most important data points this week, and that has to be the debate later on tonight, which may be the only debate between the two presidential candidates, and then secondarily CPI report in the morning.
Yeah, no, and these moving average battles, they always fascinate me. Moving averages play a huge role of our analysis of understanding short-term price action, something we do very well at Tackle Trading, and respect those falling moving averages in the short term. Eventually, they work themselves out, but they, as you said, can be tough to break. Matt, you stated the next 24 hours are going to be some of the heavier 24 hours of this particular week as we have the presidential debate, as we have the CPI data that comes out tomorrow morning. Pretty light economic week overall. We had a small tidbit of economic data came in, a small business index, which measures small business sentiment. Basically, think of it as consumer sentiment for small businesses. Missed, came in under expectations, but came within the same general range that sentiment has been for the last couple of years. Nothing really dramatic. We could see more dramatic data the next couple of days as we get into the bulk of the economic data itself. Anything to look at the chart here, Matt?
No, it's not this. The small business index is not an important report. It's just not an important report for the market today.
Yeah, absolutely. But there are individual stock news that are
Yeah,
very
and just one last point on that real quick here, Chucky. It's again, economic reports, it's going to depend on the environment these economic reports are coming in. It's going to depend on kind of what the theme is that the market's focusing on right there. And we're having a macro moment, right? Which means macroeconomic numbers are really, really, really important. Obviously, economically sensitive ones. The small business index just isn't there. It's an important one. It's just not on the macro side.
Yeah, absolutely. Listen, there are individual stock stories, as I was saying, though, that will be very important. Some interesting names today on the ticker symbols. Certainly some, and a good earnings report out of Oracle. I was really interested to hear your take on its numbers.
Yeah, Oracle was probably the most important news of the day here today. Apple had its Apple event from yesterday where they unveiled the iPhone 16 and all the AI capabilities of the iPhone 16. But the simple reality is Oracle reported numbers here today. And when you're Oracle and you're looking at these numbers here today, a decent beat on EPS, little 6-cent beat on EPS. Revenue also beat. They did increase, reaffirm forward-looking guidance, no hat trick treatment, but they had some secondary news that was really, really, really good for Oracle as well, and that was a partnership with AWS. That's Amazon's AWS, and so Oracle gets that bid coming out of AWS. They get a beat coming out of the actual earnings results as well. And outside of that, they also get a little bit of the gap up treatment as well. When you're talking about a beat on EPS, beat on revenue, reaffirming forward-looking guidance, and then they land a deal with one of the big whales of the marketplace, that's going to be news the market's going to love to hear. And we're talking about an all-time high breakout at that point. And so from a trader's perspective, you certainly don't want to chase big gap up type scenarios. You want to let secondary pattern analysis kind of work themselves out. You got to be looking at Oracle as a breakaway gap because you had some degree of neutrality going into the earnings analysis, and then you broke out of that neutrality. You tried to run away from it, which could have a little bit of runaway gap situation to it as well. Regardless of a runaway gap or a breakaway gap, I do have it labeled as a breakaway gap. You're going to look at a secondary pattern, and if you clean up 160, that's going to be a high base. You retrace back down into 150. You're going to treat that as a little bit of a retracement here. So secondary pattern watch for Oracle, definitely. Now, the second earnings story of the day was ASO, and that's Tackle 25 ASO. And ASO came out with a miss. They missed on EPS, they missed on revenue, and they dropped forward-looking guidance. And so the opposite of a hat trick, we like to call tackle trading. ASO, they picked up the bat mark, and they did swing. They did swing, but they did not connect here on their actual earnings. But what was interesting is that we didn't see, despite the negative,
I find this
we
fascinating.
did not see a gap down in a retail stock. And
I know this is a fascinating chart to me.
I cannot say how different that is in recent history, Mark. We've been dealing with some retail stocks.
Matt, I cannot remember for
been
months and months and months a retail stock that missed, and wasn't punished like epically. Like
no, and ASO missed here. They dropped guidance here, and they didn't even gap down. Now, there wasn't going to be a lot of time in front of the market open. They reported this morning, but still an interesting little tidbit that a retail stock in an environment where retail stocks have either gapped up, gapped down, and it has been fully based on guidance. ASO drops guidance just tad. Don't drop the price. That's interesting to me, quite frankly, about what the market is this week in comparison to what the market was last week. Last week, it did not matter what the company reported. It was sell first, ask questions later. The bid came into the market coming off support yesterday, kind of holding in a little bit today. ASO holds in today. Again, it's not exactly rip your face off, break out of resistance, but it is a slight change of behavior over the course of the last week from an earnings perspective. And then the third stock story here today was obviously Apple. And Apple had two things over the last 24 hours. Number one, Apple had their Apple event where they unveiled the iPhone 16 and all this new product offering that Apple does literally every single September. And on cue, Apple put out this magical, just amazing visual creation of what this iPhone is going to be, because Apple is a really good marketing company. And that leads me to ask the question, is there a super cycle potential regarding the iPhone this year that we have not had in recent years? In fact, quite a few years regarding a super cycle. Now, the anticipation on Apple is AI. But the problem a little bit is they delayed some of the features with AI for this phone, which will not be ready on release. And so there's an open question regarding the super cycle, but a good step in the right direction for Apple and the development of the iPhone with Apple Intelligence, honestly. And then obviously yesterday, selecting ARM to provide some of the AI capabilities from a chip perspective as well. So good news on that front. But on the negative front here, the EU did uphold a $13 billion tax bill today, and that's obviously subduing any of the price action here on Apple. But that's all we got for stocks in the news today.
Hey, listen, I've watched enough mafia movies. They need to come knock on the door. They need to collect their money.
The
Oh,
EU
it's good.
mafia. Yes, that's exactly the EU mafia. They're coming for their pound of flesh.
Hey, listen, we gotta offer you protection here. It takes, we need our payment though. So listen, a dollar continue to show ahead of the CPI report. Interesting little strength. We've commented on this in the newsletter. We commented on this yesterday. Continues to develop. Other commodities, crude oil under pressure, copper under pressure, gold basically hanging its range. Break down the charts for us, Matt.
Yeah, the chart here is really, really simple to understand. You got massive support at 100 by 101. That's really the conversation from a technical perspective. And it's so important that despite the massive downward movement in price, we've been talking potential reversal here on the dollar, just because this is a pattern that's been dominant for 2 consecutive years now. Up to 106, down to 101, up to 106, down to 101. So is anything going to change? Maybe. And that question probably goes at the strength of the economic reports in over the course of the next month or so. But I also think there's something happening on the dollar from an interest rate perspective as well. And right now they're having a debate whether they're going to get a 0.25 or a 0.50 cut coming up next week. And the probability has shifted to a 0.25 cut because, and quite frankly, I think this is probably smart. A 0.50 cut may signify a little too much economic weakness, whereas a 0.25 cut will signal a little bit of alleviating the inflationary conversation or the restrictive conversation. And so and the probability has shifted to a 0.25 cut for that reason. Quite frankly, the economic data in the last week has not been terrible. GDP was good. Obviously, we had some misses on the PMI side of the equation. We had a mixed report on the labor side of the equation, and so it's going to be interesting that what occurs with the interest rate. But at the end of the day, this is a support conversation more than anything as of right now. And as such, as the dollar's kind of fighting a little bit of support, gold still hanging in there between 2,500 and 2,570, and quite frankly, this is one of the tightest short-term neutral ranges I've seen in gold in a long time, quite frankly.
Matt, these long month-long consolidation tight ranges at top of charts are very rare. They're very rare.
Yeah,
like
gold doesn't do this.
Well, nothing does it for a month.
No. Specifically, gold,
which tells you something is going on here. And for us, it's the story of 2024. It doesn't want to sell.
It doesn't want to sell. Like, investors don't want to sell. Central bankers don't want to sell. Institutions don't want to sell, because regardless of the analysis, we're going into a pause. I mean, we were going into a pause. And Mark, you remember when we were talking about that pause and what the probability of gold price movement was? It was up, up, up. And as we went through that pause, we got that up, 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 up. Now, guess what? The probability of a rate cutting cycle for gold, it's up as well. But the reality is, like, there's just nobody that wants to sell their gold positions. And it's interesting. I don't know if there ever is going to be anybody that wants to sell their gold positions unless the CME increases margins. And so I just don't think we're at that stage of this conversation as of right now. I'm not sure the the central bank wants to see that margin conversation go up on gold ownership. And so gold, just a lot of confidence in gold, but again, just still hovering against that neutrality in the short term. Really good, obviously bullish conditions in the intermediate to long term. On the industrial metal side of the equation, we're tracking silver a little bit of that $28 support bounce. We're tracking this as a head and shoulders formation, and kind of that catalyst we're looking at is that trend line we have from the 32 connecting the 30 pivot. So keep an eye on silver. It's trying to find some bottoming action, but it is not ready for prime time, and neither is copper, quite frankly. And that's what we got on the commodity side of the equation there.
Yeah, listen, come join us at tackletrading.com. We have a fantastic community. We have great analysis, application, and education rolled into one. It's a very unique community and one you want to be a part of. Go sign up for that 15-day free trial, tackletrading.com, and have a fantastic day.